doing, and you can see quite an easy outcome for anybody that wanted to make some quick cash. And as I said, they were quite keen to drive the stops, weren't they? They were quite keen to try and drive that liquidity. They needed to drive the liquidity because there's not a lot of value for the algorithms to go after just now. So when they get the value coming into this bottom edge, and they've been developing this storyline for some time now, when they get the value coming into this bottom edge, it becomes a work in progress. It becomes a work in progress, doesn't it? And you know, when we regain that value, hopefully we'll be able to regain that value at the top edges here and start springing some top edge liquidity, because obviously the last time we got top edge liquidity here, they sold right back down into us. You know, so the algorithms just now are in good shape. I like what they're doing. I like what they're trying to I like what they're trying to accomplish. And yeah, we're in pretty good place at the moment, guys. We're in pretty good place. The interesting thing is the bond's doing something similar actually at the present moment, isn't it? So the buyers at the bottom edges as we came into the 1:30 data, of course, quite big data. So there's always going to be that need to be careful. But the buyers coming in at 1:30. Excuse me, giving us another RGL price at 0.6s, possibly the RGL at 0.604 just now. That would make a lot of sense. We covered bonds this morning. There was obviously a brilliant overnight buy trade in bonds. It's reversed into a sell trade into the Frankfurt Open, and then we bought the London Open again. And we've been talking about that trade since, and I had the usual suspects this morning, Kim. Yes, aye. Let's not mention Nessie's name very often, but let's not mention any names. But I was on a relatively large long position on treasuries, and I'd exited my bonds into this price. And what I said to the guys in the room is, right, guys, we're going to try and bring the price up to retest that level. So don't be selling too soon. Too bloody late, wasn't it? Certain people called Nessie were selling the bond before we were even on board on the short side. So the price never managed to retest the highs, and we got I ended up getting a crappy price down here on the ultra bond. I ended up having to cross the spreads just to get any business done. There's too many sellers, Kim. Too many sellers. Anyway, turned out okay. We managed to make some nice money, and we've now got this morning's RGL coming off this 0406, and it's already going a buy side, a bounce on this. Now, is that signalled by the absolutes? Well, let's take a look at the 5s, 10s, 30s. If we look at the absolutes, the chance was that you would have been concerned about buying bonds. So obviously, whilst it's a very good RGL, I don't really particularly like the trade, bearing in mind I'm long equities. So if I take the trade, it's basically going to end up with a hedge trade. It's basically a hedge trade. So if I'm looking at that as an absolute, my favoured opportunity just now is going to be the 12 break and possibly as high as the 16s. So that's my favoured opportunity, with the absolutes very, very jammed here. So obviously the absolute suggesting that we're expecting a higher curve, a steeper curve. We're expecting higher oil prices. We're expecting, of course, higher equity prices. So that's what we're obviously we're aware of in the absolutes, and that's obviously tied in with this brilliant buy-side bounce that we got on equities when they try to drive the liquidity. We talked about the other elements to this trade this morning. We talked about the 5s, 10s, 10s, 30s, 2s, 5s. When we look at the knob spread is actually on a very, very big tier sell side. Interesting. Let's take a look at see how it's evolving elsewhere. The 2s, 5s is on a very strong tier north side. So the hope is, obviously, from an overall bond perspective, the hope is that we get the belly in the middle. And indeed, we get the belly in the middle. You couldn't make it up. So this is why perhaps we managed to start recognizing that there was a bit of buying possibly coming in bonds because of where the belly was against the front end of the curve. So this is the classic example here. This is a great example, obviously, of a long bond trade. But what we need to now see is we need to see people wanting to buy the knob spread. If they buy the knob spread, they'll push the bond price down into 159, and we'll be able to buy up loads of brilliantly discounted bonds into 159s. By then, the absolutes will show up. At the moment, the absolutes aren't showing up because this spread is widening. So the absolutes are showing a bearish trade at the moment. So when the spread stops widening like this, the absolutes will start showing as a bottom edge bull, and we can take advantage of that narrative against the knob spread, which we would expect at that stage to be steepening behind a rise in equities, behind a rise in oil prices. Make sense? Yes, makes sense. Everybody on board? All good? All good.